Okay, welcome back. Let's get into the stock market technical analysis using the charts to be our guide. Guys, drop me a thumbs up if you find some value in the content. Let's get into it. Okay, start off with triple Q's tech sector. Again, we're looking at a daily chart, potential resistance where we're sitting at right now. You can see here on this daily chart, this is coming off the July 19th highs, resistance, and we're right there at resistance. It's slightly above. They're kind of popping above it. To me, it looks like it's kind of stop rate, like they're just kind of popping above it, and then we're gonna get a reaction here. I think it's likely we get a reaction here, a pullback. Okay, pullback to the support line, which would be all the way down here. The support line is coming off of the January 20. This is the bull trend for January. Really all of 2023. Support. You hit support. Okay, so a pullback to that support level. Until you break that support level, there is no major sell signal. I think we could get a pullback here, so maybe a small move down, but we don't have a big break of the trend until you break that trend line there. So that's that. Let's flip over to the futures, NASDAQ futures. Again, on the futures, you can see, let me kind of clean this up a little bit. Right here, we have dual resistance. We're sitting at dual resistance right now. Resistance, and we're right there at resistance now. And then also there's some horizontal resistance as well. So dual resistance there on the futures. One possibility, I just want to kind of outline it because I know there's the report, PPI report tomorrow. They could pop this thing up and do a back test of this trend line, maybe pop it above these highs somewhere right in here and then roll over. That would be an objective area to short, because on the futures you can see a broken trend line. This is support on the daily. We broke and we could back test. Okay, I don't know if I'm favoring that or not, but we'll see how that plays out. As of right now, we're sitting at resistance, so I think it's very likely we could get a pullback here. Okay, flipping over, Apple, largest component of, tech sector for sure. Apple is sitting, starting to enter this gap. Actually, my trend line's just slightly off. The gap entry is really right about there. We're just sitting right at that key gap entry. Not really entering it. We're kind of at resistance, basically. So gap entry is resistance where you're likely going to get a reaction. And then we could pop up in gap fill. That's up there at about 190.75. That would be basically the last line of resistance. You break that, you're probably going to go take out the highs and make new highs. So that's what I'd be looking for. I'm kind of favoring a pullback right here and now, and we actually don't fill the gap, is what I'm thinking. But we will just go ahead and continue to watch to see how that plays in. We're at resistance right now in Apple. Okay, moving on. We'll look at wheat. Wheat, basically, someone asked me to kind of cover this. I don't see any technical change, and in fact, I think we're right here at support. So on wheat, big bullish falling wedge on the daily chart that lasted over a year. We had a breakout. Okay, we break out, pull back, run up again, hit the 200-day, also had negative divergence, and so that makes sense. We now have a bigger pullback from that divergent high right there, but now we are coming into support right here. We could pop down a little lower, maybe run down to about 590, kind of just intraday drop down below there. And that would be very likely a buy zone because that would be a divergent low. We'd be making a new low from the former low right here. Drop down, make a new low, divergent low, right into support with a divergent low. Doesn't really get any better than that for a potential buy, an objective area to go long. So this looks like a good zone with just minimal amount of downside right there. And then I think we probably rally up and take out the highs and rally up to the next level of about $8 for resistance. So that's where I see wheat heading right now. Again, this thing's been building bullish divergence for a while. If I roll out, you can see here, look at the bullish divergence. Momentum's been moving up and up and up. Okay, we had divergent lows, breakout, and now we're back testing. So it's by the dip on this one, and that's where we're at right now. We basically have a dip, and it looks like a buy zone to me. So that's how I will be treating that one. Added a little bit more long on wheat today. PHM, home builders, they just broke down. It's sell the rip. So again, here's your uptrend in PHM. Okay, big negative divergence, been building. Breakdown, there's your sell signal. And today it looks like a back test. Now we could pop up and do another back test. That's completely possible. Sometimes you back test for a few days. So in general, still looks like sell the rip. Rallies into resistance are objective opportunities to short for the next wave down. And that's where I believe we are heading. So whether we backtest for a few days, I do believe in the next few weeks, we will be much lower. And probably in the next few months, we'll be down at the 65 profit zone. Tesla. So Tesla on the daily chart, I've got a couple things going on. Here's support. This is coming off of the January 2023 lows. Support, support, support. We had a breakdown here. It looks like they recovered that breakdown. As of right now, it looks like a false breakdown, okay? So if that's the case, then I think we could probably run up and hit the resistance level, about 290. As of right now, I think we're kind of just stuck between support on that trend line and resistance, and we could kind of chop around for a little while. So no, for me, there's no trade here. We need there's no sell signal. There's no buy signal. I'd be looking to maybe short at resistance or short on breaks of support. And there's just not a lot of range here. So I'd rather just let this kind of play out, and then we'll figure out whether it wants to break to the upside, which would be bullish, or downside, which would be bearish. So we'll just wait for that to play out. Natural gas is interesting. Here's the natural gas futures. Now, we don't have a definitive buy signal, but we've got some more relevant trend lines to watch. Obviously, here on the nat gas futures, support. There's a third reaction. We now have a valid trend line to track. It's a an upward sloping trend line. We have big bullish divergence that's been building for a while. And then we have resistance right up here at about $3. So we're heading back up there. Again, we need to break that. A breakout above $3 should send this thing probably shooting up pretty quickly. So that's it on natural gas. That's really the key levels to watch. And a conversation on the market can't really be had right now without a conversation about interest rates. So, if you look at interest rates, this is the TNX, 10-year treasury yields. This is since the COVID lows. I've got support all through here, a well-defined trend line to watch. And we had a pullback in rates over the last, week or so. You can see there's our pullback. So the market's rallied. The market is, almost an inverse to interest rates. Rates go up, market goes down. Rates go down, market goes up. So in this situation, we saw the rates come down, but nothing's technically changed. And we have an uptrend line. This is a bullish trend. We had a pullback basically to support. We could pull back a little bit more, but nothing's been broken. No trend has been broken. So we're basically pulling to support. And then from here, buyers should step in. And if the rates continue to rally, it's really sellers selling bonds is essentially what it is. But if the rates continue to rally, then that should be bearish for the market. You should see the market start to come down. The former highs in this cycle back in October of 2022 were 4.31%. We are not too far off of that. That's obviously where this pullback just started. If we rally and see rates pop above that former area, you'll make a new high in this cycle, and I suspect the market will go into freak out mode at that point in time. So something to look for is a condition, to watch. If you start to see that, let's see how the market reacts, because I do suspect the market does not like it, and especially tech. So keep an eye out for that. Until then, obviously if rates break down, then that would be a technical change, and we can evaluate that. But I don't see any indication that the rates are going to break this trend. There's no negative divergence on the PPO or the RSI. You can see we just have bullish momentum, and this was basically just a pullback. No divergence right now. So it doesn't tell me that this trend is about to break. All right. Doesn't mean it can't, but I don't see it in the charts. And we'll wrap up with semiconductors. Here's the SOXX semiconductor ETF sitting at resistance. You can see several reactions. There's some support reactions there. It popped it and sold that down. Reactions right here, and we're basically at resistance. So I believe that will get rejected here and head down to the support line. From there, again, you know, the buyers will likely be there. So we're kind of starting to sandwich into a really tight range. A break above this key level right here, about 505, should be bullish and will likely mean that we're going to take out the highs right here. So that would be bullish. And then obviously a break down to support, the buyers will step there, and then a break below that trend line is bearish. And, you know, that's your trend line for the entire year. So it's pretty simple. You know, we take out the trend line, the major trend line, the bullish trend line, and that's bearish. We start breaking above kind of where we're at right now across the board. You know, we're triple Qs and stuff. We start to break out above where we're at, then we're probably going to put in new highs for another leg higher. So just react. That's the best we can do, is just react as we see it. I'm going to go ahead and get the video out there. Drop me a thumbs up on your way out, guys. I'll catch you on the next one.